Hello everyone and welcome to today's Major Markets Update, August 26, 2022. That was quite the plunge today. That feels and looks like a C wave to me, potentially a fifth wave as well, though the proportions are a little bit off on that one. So let's go straight to the charts and go from bullish to very bearish, assess some market breadth indicators that are able to be updated so far today, as well as what others are seeing to help to us in determining if what we're seeing is the right assessment. We'll go through all those things later on. Let's go straight to the charts. So here is the S&P 500 hourly chart. First, I wanted to point out that I was looking for an ideal B wave bounce between 42.20 and 42.46 or 20, 42.45. That is outlined here in the thick gray area. That is ideal, that is textbook, that is standard, but we all know it doesn't have to be. A bounce can be 23.6%, 38.2%, or 76.4%. Why was I looking for 50 to 62%? Because that is much more normal for a zigzag. We only got 38.2, 41.97, and we got 42.03. That is off by 6 points on 4,000 points. That is as spot on can be. So we had this. I was then, as you remember yesterday, looking for a continuation, a subdivision of this B wave into that ideal target zone. So yes, I got the direction for today correct. I was looking lower to about 41.50, but we missed it by 100 points. So again, this shows you that one can get a good general idea of what's going to happen, but one cannot nail it all the time. It's impossible. I think we've done a great job over the last week, but then once and again, we missed the plank, though so far we can explain what is going on. And that just shows you that all we do is anticipate, we monitor and adjust. I anticipated the drop to 41.50. Well, that was achieved. We're now at 4,050. So then I have to monitor for it. That's what I did. We broke below it, and then I adjust accordingly and realize that we have failed to reach the ideal target zone. But that's why it's ideal. It doesn't say this is the must reach target zone or set in stone target zone. This will happen with 1,000 million% certainty. No, there is no certainty. There's just retraces and numbers, and Powell pulled the plug if that is the case. But we knew we would go lower. We're simply going lower than anticipated. So we have to adjust accordingly. So it looks like the zigzag is already underway. Potentially 4,020, 4,030 should be on tap. Wouldn't surprise me if that's the case. Below 39.50, again, then we'll have to turn more bearish. This is the bullish wave count we're tracking. Again, the market hasn't proven it. We're tracking it. We want to see it. The fourth wave can go deeper than what it should, just as the third wave went longer than it should. Should means 161.8% extension. And what we got was almost a 200% extension. So then, as I said on Wednesday, most often the fourth wave will go quite farther than one would based on the retrace levels. Then we might go simply back to the 100% extension, etc. So please keep that in mind that we are in quite an extreme environment. So this 4-5 setup has not been proven yet. That we've constantly been tracking. The other option, which is the bearish option, is that we're in this B wave to about 3,900, and from there we're going to get the C wave. So far, this starts to increase probabilities. So please keep this in mind. The 4-5 setup has not been proven, and this is increasing probability. The most bearish one is that we've topped for a B wave. Now, I've seen many tweets that said the market has never rallied this high in a bear market. We've never had such a high retrace in a bear market. But of course, if this is super cycle 4, we have no data for a similar degree wave since the bull market started in the 1930s, because that was a super cycle 2. So we have no comparison. So without any real good comparison of wave degrees, we've had, of course, lots of major force, lots of primary force, we've had lots of cycle 1, cycle 2, cycle 3, cycle 4, all those. We have plenty of apples to apples and oranges to oranges comparisons, because we then can compare similar wave degrees. If we're now in super cycle 4, it has never happened before of this degree, so we have no comparison, and that's why such comparisons might fall flat on their face. Please keep it in mind. So this is still a possibility. But the most bullish one is the rally to 5,500, and we're simply in a deeper fourth wave. Even this wave 1 can become a leading diagonal where wave 4 and wave 1 overlap. Please keep that in mind. The other possibility is we're now in wave B, and we're going to get a larger bounce, and then we're going to drop. And all of wave B is completed, and we're going to go pretty much straight below the June lows. The latter fits quite nicely with this bigger picture multi-year bear market path that I already painted in weeks ago, if not months, weeks ago, already from the June low. So this is made in June. I was looking for this path. So far, so good. So we must give this potential credence and say, you know what, this has credibility. We have to give it credibility. This is certainly a possibility. There are still many ways to go about because we have not proven 5 waves higher. We have not. Once we do that, then things start to change tremendously. Then we have the either ABC path or the larger impulse path. So far, I cannot discount this option as well, simply because we don't have 5 waves up yet. Please keep it in mind. Please, please, please. I cannot state it often. I cannot discern the difference. People that ask for absolute certainties should put their money in a bank account, and that's it. I cannot make it more certain than this. I'm tracking these possibilities. So here then is the Nasdaq 100. On a daily closing basis, it looks like we're doing 5 waves lower. Let me show you that. I like to look at daily closing prices because you can really see 1, 2, 3, 4, and 5. So that would then be wave A, wave B, and wave C. I know this is different from the amount I have here for the S&P 500. This one suggests all of wave 4 is already underway. This one suggests that we're only in wave A, wave B, and then wave C. Alternatively, 1, 2, and of course 3, 4, and 5 lower. So please keep that in mind. So the closing prices look better for 1, 2, 3, 4, 5. Even if the wave 4 is more disproportionate versus wave 2. But that is fine. There's no overlap. The other alternative, as I showed you, is that we did already 5 waves lower, wave B and wave C, and I can't capture those 5 waves with the closing price. Okay. I like the closing price because I would say 8 out of 10 times it aligns very well with a non-closing based Elliott wave, but you can clearly see we've broken solidly through 12,900 support. So I think the 50-day moving average here at 12,457 is on tap. And also with this wave count, we did a 38.2% retrace for this B wave of all of wave A. So please keep that in mind. And again, this starts to look much more like a C wave than a 5th wave. But I want to keep an open mind and that it is possible that we will see a bounce soon. So either a bounce soon or we're going to go straight for wave 5, one of the two. So then we have the semiconductors. Yesterday, this looked great for already a completion of wave 5 of C of 2/B, right here at the upper end of the green ideal target zone. But we missed the gray target zone by quite a margin. It now appears, and this is anticipate, monitor, adjust. When more price data becomes available, you can adjust accordingly. That this is a ending expanding diagonal. There have been several of this in the semiconductors, also in the IWM, so it is not a stranger to this market where wave 4 overlaps with wave 1. 1, 2, 3, 4, and 5. I like it. And then we can still target 2750, potentially even lower. Okay, so we start to see positive divergence, potential positive divergence on some of the technical indicators develop. It's a condition, it's not been confirmed. We need to see pretty much Monday be a doji day to the downside, and Tuesday a big rally. And then we have confirmation of potential positive divergence. So here's the IWM. I had a question mark 4 here yesterday, and so far this looks pretty good for 1, 2, 3, 4, 5. So this one suggests that we then get an ABC as well. I have a hard time counting this as 5 waves lower because we had pretty much not a lower low during earlier this week. So this one also starts to suggest we might get the zigzag versus the flat, right? We had the 2/B flat, ABC. So this should then be a zigzag. So please keep that in mind. Those two options that we're tracking. The first option is that we're going to get the B wave bounce and then another leg lower. And the second option is, as I showed you, we have completed all of this pullback already. So it is a little bit up in the air, so to say. Which one it exactly is, I can give a 50-50 to both, depending on how exactly one interprets this price data. Again, there's nothing wrong with the Elliott Wave. It's about how you exactly interpret it. And we want to go about and try to interpret this as good as possible. And I'm going to therefore also review what other people are seeing, so you can get a good idea. But if we even get a rally to new highs, then that would be a wave 5, which is up, and the bounce is also up. The bounce will probably stall, and then we go lower prices, and that would be your wave 2 of this larger wave 5. The Dow Jones looks also better as a ABC, I must admit, ABC. And remember, for the Dow Jones, I already said we have this overshoot, right? The typical retrace is 23.6 to 38. That's what you start off with. So far this week, except for today, we stalled right in that target zone. But I already said, due to the overshoot, expect also undershoot to the 50% retrace. And we got pretty darn close today. The 50% retrace is 32 to 14. So far, nothing out of the ordinary. This also looks better as an ABC for this wave 4. And here is the ideal wave 4 target zone based on C and A relationships, or how C relates to wave A. Okay, and we can overlap with this wave 1A for a potential expanding leading diagonal. Wouldn't surprise me. We failed a little bit to reach the ideal wave B upside target with today's high. I'll show you that in the summary slide. But again, that's based on 50 to 62% retrace, and the market reserves the right to do more or do less. And as you saw for the S&P 500, it did a little bit less. So I still think we should be able to bottom here pretty soon. Remember, this is now a pullback within a stronger uptrend, meaning we're above the cloud. Yes, we're below the 200-day, but we're above the 50. So this current pullback is different than the pullbacks we saw, for example, here February, March, and then the rally here that failed and went below the cloud. Okay, here we're below the cloud, here we're above the cloud. The cloud is the green, red annotation on the chart, so please keep that in mind. So to summarize, it still looks like we have a ABC lower, ABC, with the potential for it to be 1, 2, 3, 4, 5, and then this wave 4 is going to extend in time. All we get is a bounce and then another leg lower. Alternatively, then we have the potential for a deeper B wave and then a C wave rally, and the most bearish counters we're going to go straight below the lows. Again, we have not confirmed 5 waves up yet, not on the S&P 500. So we have to be cognizant of the fact that we're not yet in a bullish environment. Semiconductors, in my humble opinion, has done 5 waves up and is now in a expanding ending C wave diagonal to about 2750. It's getting close. I like it. I think things are getting quite extremely oversold. Watching for some potential positive divergence developing on some indexes, technical indicators, but that's a condition and not a signal, has not been confirmed. Let's look at the new lows so far today. I don't have any more data than 80 and 121 for the Nasdaq and the NYSE. Rather benign, can always be much higher by the end of the day, but these are not yet extreme levels, not even close to what we had here for most of the year. If you look at the PMO buy all sell all indicator, yesterday it closed at 14. I'm pretty sure by today it's at 0. I would be surprised if it's not at 0. So that starts to suggest that most of the downside has already completed. We got a sell signal earlier this week, and that one has been correct. Just as the buy signal was correct late June, the sell signal here earlier this week was also correct. So I think the downside risk based on this indicator might also start to be less than the upside reward for either a bounce or a new rally. If we then look at the PM of the McClellan oscillator, the S&P 500, as you can see here, there is potential positive divergence developing between the low earlier this week and the current sell-off. Potential has not been confirmed yet. Positive divergence, I show you, often leads to good rallies. Here we had positive divergence. What does it mean? It means that there are not as many stocks declining as previously. So here we had a decent rally, and here we had a decent rally, and here we had a decent rally. So positive divergence is often a good indicator, but it's not been confirmed. We'll have to wait and see early next week how this is going to develop, but it will then add weight to the evidence that we can expect at a minimum a bounce. So I'm going to review some other folks' work. This is from Pretzel. Pretzel, always good. Love his work. It's crisp, it's clear, it's good. He was looking for a bounce here to about 42.20 as well, 25. Didn't really get it. Same as what I was looking for. But he was also looking there for a fifth wave lower. So that fits with my narrative. All right. So he said the S&P 500 went in the grade 4 zone. So he is looking for a wave 5 lower. So we need another wave down, okay, to make this an impulse. Okay, so far so good. An impulse lower doesn't mean it's instantly a bear market. It can be a 535 as a zigzag, as I showed you ABC. Okay, so we're not, it does mean, of course, after 5 waves lower, expect another leg lower. That's for sure. So for now, the market, he said, has kept this option open, but we need this other wave down. That's what we got. So that fits what we're seeing. This is work by Avi Gilbert, and he was looking here for a wave 4 low between 4100 and about 3945. So 4100, as I pointed out, 3950, 4150 is strong support. So far that seems to pan out quite well. If we go below it, we then move to this A, B, C pattern. So there's quite a few options. So here he's looking for this A, B, C for the wave 4. Or we are looking here for a deeper wave B, which fits with, of course, not this one, my scenario as well. We have the deeper wave B versus the 1, 2, 3, 4, 5. So his work and my work align. Okay, I like it. That's good stuff. He has a little bit deeper wave 4 than I would like to see, but it is possible that we are in a potential expanding or leading diagonal wave 1. Wouldn't surprise me if that is the case. This is work by Zachary Manas, also from the same group. And he's looking for, I think this was posted yesterday. Yeah, it was posted yesterday. A deeper wave 4 to about 4011, potentially 3940. Okay, so far so good. Seeing the A, B, and C as well. So I agree with that as well. As you can see, I do try to track other people's work as well, see if my work aligns. I always start with my own work and then see what other people are finding out. And these, I think, are some of the much better Elliott waivers out there than some other folks that I cannot recommend. But so far, so good. So we're in this boat of, is this a wave 5? According to Pretzel, it is a wave 5. Or is this a ABC already of the zigzag, which is also possible according to Zach Manas' work. So that aligns with the two options that I provided you. I wish it was clearer, but it at a minimum suggests that if we complete our downside soon, over the next few days, expect a very good, decent bounce, potentially new highs into the 4400s, 4500s for the wave 1. But the bullish wave count has not been confirmed, so we keep those two bearish options on the table, which is also what we have here presented by Avi Gilbert. So we're doing exactly what everybody else is doing, so to say. It means that what I'm seeing is correct. Let's go then to the summary. Oh, the summary slides are right here. So, holy smokes, Batman. Today feels really like a C wave. It really does. It feels more like a C wave than a fifth wave. But again, those are two shorter term options on the table. So on Wednesday, I was looking for, if we move above the highs, then we target 42.35, etc., etc. What did we get? We got 42.03 today versus 42.20. Fell a little bit short. It can happen. Nasdaq 100, I was looking for 13,400. We got 13,175. Dow Jones, I was looking for 33,600. We got 33,364. Okay, pretty close, not too bad. Semiconductors, 29.75. We got 29.73. Bingo. IWM, 195. We got 195. Bingo. So on Wednesday, I share with you that we have technically enough scribbles in place to suggest this first leg lower is complete. So we got continued rally yesterday, but the B wave did disappoint on a few indexes on the upside. Cannot always get it exactly correct, off by 17 points on the S&P500. This is still not too bad, you're off by 0.5%. Semiconductors are, however, most likely expanding ending diagonal. Seems to be a little bit different form and fashion on that one. So the flats versus the zigzag option is still on the table for the bullish path, the 1, 2, 3, 4, 5. So far still looks like a zigzag. The alternative is that this was only wave 5 of A/1. We still get B2 or C3. Okay, I still cannot rule out the 1, 2, 3, 4, 5 setup to the downside of the bigger picture because we have not done 5 larger waves up. I need to see support hold at around 39.50 at the lowest to give us that last 5th wave higher. Once we get that last 5th wave higher, I will turn much more bullish. Spoiler alert, so far the S&P 500 is tracking this bigger picture supercycle 4 wave count pretty well that I already laid out in June. So we still have to remain diligent and not become complacent. That's all I have for today. Thank you so much for listening. Take care, trade safe. See you all on Monday.